It's all about nutrient efficiency, right?
Exactly.
I've taught you all the things that you know.
Oh, yeah, here we go.
I'm Sherry Cook. I'm passionate about helping farmers with crop nutrition, and I'm here to help you with your operation.
Let's get our next seminar going here this afternoon. I'm Randy Conan with the Red River Farm Network. Don coaxed me out of retirement for a few days here, help out at Big Iron, so you're stuck with me. With me from Farmers National Company, Kyle Nelson, Scott Hitter, and Darwin Thuy. And let's just talk a little bit about land values. The title of our presentation this afternoon, Farmland Update. Values holding. Are we seeing a soft landing or a bubble bursting? So hopefully we'll clarify or see where we're at on that here this afternoon. If you have any questions, raise a hand and we'll ask questions. We'll also leave time here at the end of the seminar for you to talk one-on-one with these guys, and they'd love to visit with you. So let's get started here. Let's characterize this land market. What's this land market been like since this time last year?
Well, I usually try to come up with a word or a phrase that kind of summarizes it, and this year, confidence, I think, is a word that summarizes it well. We don't have the economic conditions to lead to optimism, and in the short term, we're not seeing a lot of optimism, but I'm not seeing that translate into pessimism. And we're seeing stable land values and cash rents, and even a tick up or tick below. And I attribute that to confidence that despite short-term economic circumstances, that in the not too distant future, things will be better, and therefore why make a long-term decision, which would be buying land and even renting land, because once you get your foot in the door, that it can be in the door for a while. So they're making that more of a long-term thing. So confidence is the word that comes to mind for me.
Darwin, how about you?
Yeah, I agree with that. Seems like there's less land for sale too, so that kind of helps stabilize the prices a little bit. Where there's more buyers in the pool that are hungry looking for a piece of ground, so that helps in this environment especially. So yeah, I think I would agree with Kyle, though. I would say it's stable, and about the time you think that it can't go any higher, you hear about a piece that sold for a couple $1,000s an acre more than you thought it should have or would have. So I think it's a stable market, I guess.
Scott, in your area, how about that?
Yep, I totally agree with what these guys are saying. One of the unique things that I'm starting to see a little bit of, I do quite a bit of farm management also in the absentee landowners. We're in lease negotiations as we speak right now, and it's really interesting talking to the landowners. Scott, I need a little bit more on my rents. And I'm like, well, where we're at with these markets, the unknowns in the economy, if we're right with our rents, stable is probably a pretty good decision. But it's the absentee owners are really feeling a lot more expenses overall in their cost of living also. So there's been some talk, based on the value of that land versus what the annual return is on their rent. Maybe I should sell. So I don't see a major shift, but that sentiment is out there right now. The impacts of the costs are affecting everybody, both absentee landowners and the farms.
Are you seeing any areas stronger or weaker?
My answer to that is that if there's a lot of what I call next generation farmers in an area, I think that is really a key in keeping those land values where they're at, or even strong. I mean, we even in the last year had some pockets that we saw even continued increases, and I attribute that to a number of next generation farmers. Their predecessors have the maybe financial backing to help them out, perhaps. You got the beginning farmer loan program that probably comes into play, but that's where I see strength is where that's the case. So there's motivation for that 60-some-year-old operator to go out and buy that piece of land because there's another generation, and maybe there's multiple members of that next generation that are looking to farm.
You guys agree?
Yeah, I do. I agree. I think it's, there's pockets. Seems like there's pockets where if land comes up in a certain county where there's not a lot of land, good quality soil, then it has more attraction than other parts of the country maybe. So it just kind of varies on where you're at, kind of.
And it could work the other way too. Like key going forward is supply and demand. So and none of us know exactly where that tipping point is, or too much land on the market in a given area. But that's a key thing to watch because we certainly don't have as much demand as we might have had 3-4 years ago. So that's something to watch.
And a lot of the people that owned land when the market was really climbing 3 or 4 years ago, a lot of the people that were thinking about selling sold. So the people that are kind of in it, the long-term ownership people, I've got people that as they age, they're coming into needing one spouse or the other might need long-term care, or some of those expenses are climbing and they have to sell part of their land equities just to pay bills, and so they're forced into liquidating some of that.
Yep.
I've encountered that a few times lately.
Yeah.
Basically that same motivation.
Yep. On a smaller scale, just the flood diversion project, obviously we've talked about this in the past also, but when you throw in some extra funds, get land out of the valley, there's some extra strength there, and it's almost an artificial number, but it's a number. So we do see that also.
Yeah, sure. What are some of the factors that would influence the market?
Probably the people that were on the panel last. Corn prices and marketing their grain. I mean, the prices are down, and it's hard to pencil out when you sit down with your banker and you're talking about $3.50 corn instead of $5 corn. The numbers just work better for lending money. So, and then we've got a lot of cash buyers too that seem like they still have money. So then that takes that guesswork out of it. So if they don't need to borrow the money, then they have a leg up in the sale that's going on. So, especially if it's an auction or something.
I think a change we're seeing on that is we used to say the fundamentals. What are commodity prices? What are interest rates? That sort of thing. But what we're seeing now is defying that. And it's not that long ago we had a super cycle or whatever you want to call it, where we had a dramatic increase in land values and rents, and with pretty significant correction after that, which correlated with commodity prices. So 2 years ago I sat up here and said, I think we're going to see a correction. And I was wrong, because we continued to accelerate in many cases. There's always, ticks up and down in certain cases, but, it's following more than the fundamentals. And there again, it brings me back to the word confidence. People are taking more into account than the near-term fundamentals.
More of a plateau then, kind of.
Well, we never know until we're past it, but I mean, I think we're past that peak or plateau, but I think we're in a position now where that doesn't mean we might not see a sale that is boom up here, and we'll undoubtedly see some sales that are down here for whatever reason, because there's always unique circumstances, conditions. You never know. I always say, people ask, when's the best time to sell land? And it's the day after the market goes up 20 to 30%, but you can't predict that.
Let's talk about what you guys do at Farmers National. What are some of the services that you guys provide?
Sure. So myself, direct services, farm and ranch management, and then the real estate sales. I do represent, it seems like on the buyer side quite a bit. Get guys that are saying, hey Scott, I want to be in this area, and knocking on doors and trying to find dirt for guys. But the primary thing we do is land management for absentee owners. We try and provide peace of mind for them. So we're the local boots on the ground. We know the markets. We know where the rates are, rental rates. You know, we try to be fair to the landowner and to the tenant.
Darwin?
Same pretty much as Scott. I've got my farm management territory is west central Minnesota and eastern South Dakota, basically. So that's kind of where I jive in. The other thing I'd add to it is Farmers National as a company has a branch of our company is a hunting lease network, for example. So if people have land that might be a quarter of land and 120 tillable acres, but 40 of it's trees, sometimes they're missing the opportunity that, unless they hunt themselves or something, but they could lease that out for hunting as a way to generate a few extra dollars to pay for taxes or whatever. So.
And then I'm an appraiser mostly. I manage farms and I sell farms. But really the backbone of the company is managing land. We've done it for almost 100 years. The other services support that. We broker co-op stock, crystal sugar, ethanol stocks. Yeah, oil and gas. We actually manage a lot of oil and gas interests. We don't. We can't tell you much about that, but company-wide we do. So.
Yep. Within the oil and gas, it's we call ourselves it's an energy division now, in primarily oil and gas, but we also we look at the regeneratives, the wind and solar and everything. So
let's just talk about hearing the feedback. Yeah, there it goes. Found it. Let's talk about land sales. How have they been? Have you seen no sales? Are sales weakening? What are you seeing?
I've seen the no sales starting last fall. There's a couple factors. I mean, expectations, realistic expectations. That's part of it. I think we've continued, especially last year. There were some really strong sales that I would consider anomalies. Not many people are aware of that. Some people think, well, that's the new market, and we're not in that area right now. So realistic expectations. Another one, with the times, marketing, online options for auctions, marketing, the website presence, mailing lists, whatever, because people aren't reading newspapers is what they once were. Obviously, we all know that. So I'll say non-real estate professionals. I track those, and I see a lot of sales that never close. So if you don't offer those options, people aren't going to find you. It used to be, you maybe put an ad in the local paper and that covered your market, and that's just probably not going to cut it today. So, and I'm still seeing that happen where I just pick up a local newspaper and it's like, well, I haven't seen that ad anywhere else. And sure enough, it doesn't sell, or maybe it sells for $1,000 off the mark or something like that.
I'd say, the farmland's pretty straightforward, pasture's pretty straightforward. Some specialty type properties, whether it's potential recreation or potential development property, it's a little bit more unique. It's a little different buyer pool than we're looking for, so those can take more time.
How hard is it to work around some of those anomalies you talk about? Now we heard of one sale up in Pembina County that was humongous. What kind of challenges does that make for you guys?
Well, it helps for a little time to pass. Another sales that happened that kind of proved that was an anomaly. But we always used to think one sale doesn't make a market. And some people maybe gravitate towards that wishful thinking. Seller side, it's like you hear about one sale, and it's like my land's worth that too. And I guess we all try to be pretty realistic as best we can, and it's. I think the people I've dealt with have understood that for the most part, but we've seen a very dynamic market. I mean, same piece of ground, you can have a multiple tract auction, and parcels that are mostly very similar in characteristics end up selling for $1,000 or more different per acre, and it's just based on criteria you can't account for, just motivation of that seller or how the sale was conducted or whatnot. So it's your range of values is on a piece of ground is larger than it used to be, just based on those factors.
You know, I would say also that if you have an anomaly and there aren't a lot of comparables, that's a challenge. When you have a lot more sales in a local area, and you can do a lot more truthing that way, and it just shows you truly where the markets are. And you know, part of the job is educating the buyers and the sellers.
And those anomalies are coming off of auctions, right? Is auction the best way to sell a piece of farmland?
What's the piece of ground?
I say, well, what is it? Where is it? You know, quality of the land. Obviously, better quality. You know, going to see more appeal. In my opinion, there's two reasons why you have an auction. One is because you think there's upside, and two is you want to expose it and give everyone a chance, and it could be both of those. So we're at a point now, depending on the piece of ground, where it is, because some areas are more competitive than others, and what it is, quality. You know, you may look at listing it at a price, because if you don't feel there's that upside, why do you do it? You know, so.
Well, another option too is if you've got a margin, well, not even a marginal piece of property, but if you've got a piece of property that might have blemishes, you know, you might have a slough out in the middle of it, or you know, something that just doesn't allow the farmer to farm it from fence row to fence row. And then, but that might be close to somebody, but on an auction, you're only, buyer B is only gonna, or the lead buyer is only gonna, once they have the bid, they're not gonna outbid themselves. So the bid sale basically takes it to a different level where different buyers submit their best offer, but nobody knows what they are. And we've seen differences of a couple $1,000s an acre because the neighbor next door wants that piece, even though it's not the perfect ideal piece.
Yep.
So like they're saying, a lot of it is, what's the ground, where's it at, is there blemishes, what kind of quality is it? And that kind of determines the best way to sell it, I think.
You know, one thing with an auction, 100% of the time you know what the second highest bidder was willing to go to.
Right.
Sealed bids, sometimes, you know, you'll find out more where the top bidder is willing to go to.
It's the key is interpreting the environment you're in, because we did, and by definition, an auction, you need more than one person that really wants that land.
Yep.
So otherwise it don't work. And you know, that high bidder might have been willing to go much farther than that. It's only going to be one more bid than the next highest bidder. So in weaker environments, we have done the sealed bid or some kind of bid process, whatever. But then, you know, 3-4 years ago, markets started taking off, and I know some of the first auction sales we started doing again. Sealed bids never would have. Those people entering the room never would have thought they would have gone that high, but they were that motivated. So it depends on the market you're in. We were at the beginning of this kind of slope, and now we're somewhere, you know, at the top or just past the top. So you gotta factor all that in to decide what's the best way to do it. So
How has the online bidding changed that?
tremendously.
Yeah, I think it gives a lot of people a better opportunity. I mean, we got landowners, let's say we have absentee landowners, like Scott said, that we manage their farm for, and they're looking for land in their county that they already own land in, but they live in Texas. And they're not going to come back for the auction if it's a live auction, but they might bid online. And so they might push that bid that the local, you know, it might create a higher bid. It brings more buyers to the table if it's online. Or you've got certain areas where one farmer sells seed, the other one sells crop insurance, they're friends, they don't want to bid against each other. And so a live auction, if they figure out one person's bidding against the other, one of them will quit. Or if it's an online, they might have a number. I mean, we've got live auctions where people sit in the back row and bid online. So they don't want people to know they're bidding, whatever, so. No.
Yeah. This is still a relatively new area for farmland auctions. It's only been prevalent for a couple of decades, you know, so there's still some areas that aren't real accepting of it. So, you know, if you go to live auction and you end up bidding up your neighbor or whatever, and don't get it, that's the worst scenario. Online, at least, presumably, they're not going to know who bid them up. And if you end up buying it, then you'll deal with that. So it's like the worst scenario is bidding them up and not getting it. So not only have you ticked them off, you don't get it. So You know, as time passes on, you know, at the beginning, you know, people were a little reluctant about the online auction, but more and more, they tell me I like it. Or in many cases, I've had people say I wouldn't have come up and shown in person. If that was the only option, I wouldn't have been there. So our job is to expose it to as many people as possible and to create the truest result possible. So,
Do you see that transition continuing to more and more online type auctions?
So far, I think. I mean, it depends on what the land market does too. You know, I mean, if you don't, the last thing you want is a failed auction. You know, so if you're exposing the land to the market and all of a sudden you got bidders and you have to call a no sale because the bid doesn't get there, that hurts the sellers. It hurts the people that are representing the sellers. Hurts the market in general. And so until that starts happening more and more, I think you'll see the online auctions still continue to be a pretty viable way to transition farmland into cash.
Is there a right size for that sell better piece of a parcel of land? Is it a quarter section? Is it a half section? What sells better?
well, it used to be the smaller, I mean, 80s would sell for more. I mean, I think you can make the argument that bigger chunks are finding more appeal because the total dollar amount is less of an obstacle than it was 20, 25 years ago. I remember when I first started as an appraiser 20, 25 years ago, you'd probably discount a section that couldn't be parceled out because who's got the money to buy a square section? You know, and then now I would argue I see more where there's a premium paid for that bigger unit because, I mean, it warrants traveling a farther distance, whether you're actually farming it yourself or you're owning it and renting it out. And I've seen that. I can think of one north of here, 40 miles. The buyer, and he was an investor, clearly paid a premium for the square section, and then subsequently, the sellers kept a farmstead out of it. Subsequently, he paid a ridiculous amount for that farmstead, cleared the whole thing. You know, so now he's got a square section. So, but generally, you know, when we're marketing something, we want to create as an opportunity for as many people as possible, which is where your high bidder choice bid comes into play, because, you know, you could have the high bidder can choose one of the four quarters. Let's say you got a square section, or you can take it all. You know, so the choice is in the bidder's hands in that case, and it's not up to us, as opposed to if you just did tract 1, tract 2, tract 3, tract 4. So that's the change I've seen.
You know, typically at an auction, more bids creates excitement, and more bids brings more bids. And when you have choice, it tends to bring more rounds of bidding and a little more excitement to the sale.
Are you seeing more investor-interested farmland, or is it mostly just farmers yet?
I think investors they kind of have their return in mind, you know, so as the price of land climbs, investors might be in the market to bid on the land up to a certain point. You know, if they want to get 3 or 4%, they've got that number that they know will return that, and that's where they step out. So I think they're there. I think they solidify the market in getting that bid, forcing the bid to a certain level. And then normally local people will take it over because emotionally they want something that's close to their land, close to their home base, and so the return might not make as much sense, but the long-term value of owning that piece of property does.
You know, the investors I'm working with, what they're focusing on is two things. You know, what's my annual return, and what's my increase in my value potential. And what I see them looking at, they're doing their due diligence. They're looking at, can I improve this property? Does it got a pile of easements on it? I can't tile it. I can't improve it. You know, they won't even look at that. Where a local farmer, based on location, you know what, it's next to some of his ground, he probably would be more excited. But the investors that I'm talking to, you know, they're out there, but they need not only the return, but they need some way to improve what their investment originally is. and have additional return.
Are you seeing improved land keep its value, or is that one kind of floating a little bit?
A little bit of a wild card, but basically in our region, improvement, tiling is probably the primary thing. So tiling will always improve the value of the ground. Sometimes it improves it faster than, in one type of soil than another. So
I think we're at a point now where with tile, in more cases, it's going to add that value back pretty quickly, whereas, however many years ago, you might spend $1,000, $1,200 on tile. Maybe it only adds $500, $600 in value based on what's happening in the market. But, just with how values have shot up, I think you can make the argument more often than not, it's paying for it. And usually who has the concern of that is the absentee landowner. The farmer is going to make that money back in the crop, but the landowner is concerned about, making that investment, and obviously spending $1,000 an acre and it only has $500 in value. That's not always real attractive to somebody, but
yep.
It definitely nearly always improves the quality of land. I've seen a few pieces lately that was a little questionable about, but I mean, by and large, it's, and we've all discovered it's easier to get more out of the land you farm than to find more land. And I saw that years ago in other areas, and around here, it's well, I'll just farm more land, I'll rent more land, whatever. Well, we've gotten to a point where that is its limitations, and that comes with hired help, having to run new equipment, and that has its limitations there. So people have seen the light, I guess I'd see, in, we get more out of what you already farm rather than farm more acres.
Do you see people buying the marginal land and then trying to improve it more to be productive?
Yep.
Yeah, I mean, there's certain buyers that have always been in that niche, whether there's more now or not, it's hard to say. They'll buy it, and then they'll put the easement on it, or maybe they'll buy it and tile it, or maybe it's CRP ground, or maybe it's ground that they'll just tile it, and that's the improvement. But, what do you guys have to say?
I've seen some ground down in South Dakota. Little bit of cropland, quite a bit of pasture, good PI indexes on it, and there were some pretty strong bids with the intention of breaking it up and turning it into cropland. So that's not the norm. There isn't a pile of ground like that, but those people look for those opportunities.
Productivity levels make a difference too, or not?
Yeah, they do. It's one of the tools to look at. Depending on the market you're in the state you're in, North Dakota PI index is based on wheat. Where's the money? Corn and beans. Yeah. We can raise a tremendous crop on a lower PI index than the Red River Valley even. So if we're in a 60, 70 PI versus a 90, there are times when I'd rather have the 60, 70 doing wheat than raising corn and beans than the heaviers.
Time of year, does that make a difference when you sow?
Used to be, now through March. Some people felt it was after harvest through March. Online changed that because you can do, bid from anywhere, combine, tractor, whatever. So in theory, 12 months out of the year, reality, we go through stretches where there are certain times of year I don't think are great. I don't think certain periods in the summer are that great, and the heavy spring season, July maybe isn't so great. And even the last couple of years, I've felt that late summer, early fall hasn't been good in hindsight because there's uncertainty over commodity markets. There's something about getting into that crop and knowing what you're getting, and that's just a psychological thing. So me personally, I've timed some of my sales to be October and on. But that's not to say, you can't have a sale. We had a sale up in Norman County a week and a half ago, and I would say the results were pretty solid. So, you never know for sure. There's not that magic date, There's times of the year you might lean to depending on what's going on. But, it's hard to say whenever that, you never know until after you're past that sweet spot. So the best time to sell would be, like I said, if your auction was the day after the market went up 20, 30%.
How about recreational land? Are you seeing any changes in that?
I haven't seen a lot of that come on the market, really. I think there's people, again, it's kind of like, you know, when Scott was talking about the opportunity zones, the closer it is to the bigger population centers, there's sportsmen that like to get out and have a piece of land that they can call their own, and then it sells probably for a premium. But as far as recreational, I haven't seen a lot of it in my area.
What I've seen in southeast North Dakota, if it's along river water, boy, it can bring a premium. So it's some pretty impressive numbers.
In the desirable areas, and I'll use southeast North Dakota. I mean, it's always been the Cheyenne River Valley. There's usually limited supply. You can go years without anything coming on the market. A few years ago, there was some wooded pasture along the Cheyenne Valley that came to market. $7,000 an acre.
Providing you with an update on today's 50/50 drawing. We have surpassed
you know,
$650
even in Minnesota, in the lakes area, there's more demand than supply. So, but the key is the area. Just because you have 20 acres of woods off in the corner of your ag piece doesn't mean that's going to be sought after. I always say, as an appraiser, what's the highest and best use? Is it agriculture? Okay, then you're going off in that direction, and the value's probably based on your productive agricultural land. Is it recreation? Okay, then that goes off into this area, and you might be in a different neck of the woods, you know, with that. So, but it's definitely overall seen a big uptick in areas, but you have to have, it's in areas where there's connotations for that. Darwin doesn't work in areas where there's a lot of recreational land. You know, people tend to want to buy it in areas that have those connotations. They don't necessarily want, could be a great piece of hunting land surrounded by bare farmland. Historically speaking, we haven't seen that see great demand. There's going to be demand for it, of course. Or even close to Fargo. Through the years, I've seen pieces close to Fargo that you would assume would, oh, it's, you know, I can be out there in 20 minutes. But generally, I've seen, you know, people want to go where there's connotations for that hunting or recreational use.
Sure. How about land that has a building site, grain bin set up and such? Is there a benefit to having that on a piece of property or not?
Probably will be this year.
Yeah, exactly.
Yeah.
We'll see how many Eggsco Quonsets built in the 60s get grain stored in them for the first time in 30, 40 years or whatnot. So, but, you know, as an appraiser, ag buildings, you know, you see a limited demand. So location is a key factor. I always depreciate them a lot because that's what the market data tells me. But, you know, the one thing, grain handling and grain facilities of somewhat modern nature, I mean, that's definitely seen an uptick in demand. The capacity is a key. Obviously, the size. If I think your 400,000 bushel facility is kind of a cutoff. But beyond that, you got a little bit more limited pool of buyers. Under that, a lot of farmers could use that size. So I tell guys, if you're building one, don't put it in the back corner of your farmstead. If you have highway property, put it there. Close to three-phase power, put it there. Yeah, maybe it's an inconvenience for you to go check the grain or whatever, but you're going to make up for that in the value down the road. Because if you put it in the back corner of your farmstead, chances are you're throwing money away as far as value. Maybe you got generations coming along and you don't care. That's fine. But, you know, a farmstead that's got, you know, all these different components, you're going to see that value, that depreciation just kind of starting to take a hold. So.
Do you see land being sold that's currently under lease that maybe has a year and a half, 2 years left on a lease? Can we even sell that, or what's the process?
They can sell it. You know, the lease kind of depends on the farmer and the tenant. You know, if the tenant's willing to give it up, then that's one thing. If they're not, it depends on how bad the owner, next owner wants that land. If you're gonna own it for 30 years, they're willing to wait for a year and a half or two to wait until that lease runs out, if they're gonna farm it, or maybe they have a relationship, but they're looking for a tenant anyway. If they're an absentee landowner, they'll buy it and then keep the same tenant. So I think it could be, you know, if it's a multi-year lease, it could hurt the value a little bit of the land if it's going to market just because they don't have immediate access to it, especially if it's a farmer buyer. So I don't know, what do you guys agree or not?
I think, you know, if it's a piece of ground that multiple guys want, you're still going to have good bids on it.
Yeah.
But it isn't that it hurt it, but it just didn't help it. If you have access to it and you can farm it yourself the next year, I'd say that's more of a benefit than the downside of not being able to for a year.
Depends on how strong the conditions are at the time. You know, in a strong market, heck, you could maybe sell a two-year lease, you know, and it's not going to affect it as much. But, you know, I think we've gone back to even when the market is maybe softer. I mean, 1 year isn't a huge deal. It just depends on what's going on in the market overall. But it's not ideal, but it can be done.
You know, just keying off of that, though, one of the things under farm management, if you guys are renting out ground and own it, actually have that clause put in there where you have the right to sell it, even in the middle of a multi-year lease, so you can terminate that lease.
How about boundaries? Do you need to have those surveyed or not?
It's a question we get asked, you know, whether it has to be surveyed, and I'd say most of the time it's not surveyed, but, you know, in the valley, we got a lot of ground they farm over property lines. You know, it's maybe the same person farming, you know, pieces for generations, so there's no boundary there anymore. It's not unreasonable for a buyer to expect that to be surveyed or at least marked, you know. And of course, obviously, if you're selling off a building site separate, or if you have a boundary dispute, that's an issue we see with that same scenario. I've managed several pieces through the years where, you know, they overlap on their tillage because, you know, God forbid we leave a strip of grass or something like that. So, and over time, you know, it gets to be a discrepancy. Oh, it should be over here. No, it should be over there. Oh, I remember it was that tree, and, you know, surveys.
It was that tree that used to be there.
Yeah.
Well, I can think of one. There was a tree that was not on the line, but, you know, you would think in today with GPS that would settle that issue, but it didn't, and the issue ended up getting settled. But you know, my landlord decided they wanted to sell the land, not because of that issue. So it's like, okay, fine. I don't know, and I don't know. I don't think they ever did settle it, and then that other landowner passed away. So.
Any other questions on selling land here before we move on to just talk about some rents? Anybody have any questions at all? Okay, let's move on to rents then. Cash rents, are they changing or up, down, steady? What are you seeing?
I would say if your rents are right, this past year, I would say they're pretty steady right now. You know, we're getting a little kickback. You know, obviously the owners want more money because they have more expenses. On the other side of it, there's a pile of unknowns in the market. Yeah, we've got bushels out there this year, but the price, you know, had you stayed in the last session, you know, markets don't like unknowns. So our recommendation at this time, in general, is to just keep things steady.
When I'm having this conversation with somebody, especially if the market's like it is today, it's not, you know, there's two components. There's the economics, and there's what the market will bear. So usually the economics tell you the rent should be there, but demand probably pushes it there. And when I'm having that conversation with a tenant that thinks that the rent should go down, that seems, you know, okay, I don't disagree with you, but the market isn't telling us that. So, and usually they have to respond with, yeah, I can't argue with you on that.
What about flex leases, those types of things? You should be thinking about those?
Yep, they're a great tool, absolutely. You know, there's a lot of negativity built into the markets right now. We got our base rent. things turn around, we get a big run-up, the landowner should also get a chance to participate in a portion of those additional profits through that flex. So there can be some kickback on guys wanting to pay a flex, but you know, when you have a good conversation with them, it usually works out okay.
I utilize it in a couple different ways, but in one sense, you know, I've got some ground, and I'll use this example. It's the type of soil, it can raise 175, maybe even 200 bushel corn, but it tops out at 35 bushel beans, tops out at 60 bushel wheat. Well, if you base your rent on that 180 bushel corn yield, they'll never raise small grains. And maybe your landlord doesn't care, but you know, I think we all can agree, and I've dealt with some tenants that once they get into that small grains rotation again, they agree there's ancillary benefits to that. So that's one advantage. It can float around along with the different economics of the different crops, and that I think both sides win on that.
You know, one thing with having a flex, the option to go with a multi-year lease is a lot more palatable for a landowner because they know that their upside is also protected.
If the economics change, they're not left
Yep.
on the short side of things.
The same thing tie into like government payments, ad hoc payments, those types of things?
Oh, the landowners, if it's a cash rent lease, they don't typically get a share of that government or ad hoc payment, unless it's some kind of a crop share where they have a share of the crop. Then they get the same percentage share of that government payment. So I don't think that bears a lot of resemblance. As far as go back to the cash rent flexes, and it protects, in my mind, it protects the owners from a market swing that really goes up. And if the hardest part about negotiating leases is trying to negotiate a lease in December when you're not going to plant a crop on that farm until April or May, and you don't know what the result is going to be 10 months from the time you're trying to negotiate what a fair rent is. So that flex amount will help establish that. What's the average price? What the yield turn out to be? And then is the rent right or not? And so I don't have any landlords that don't want their farmers to make money. And I don't have very many farmers that aren't willing to pay more rent if they have a good year. The hard part is trying to figure out what that looks like before the crop year starts. And that's where the flex comes in to benefit both the farmer and the owner.
On the disaster payments, I get that question, especially when we've had some big ones. Well, should I be getting a share of that? And you can negotiate anything you want, I guess. But in my opinion, it's like, well, if you want a share of that, then you should be willing to crop share, which usually ends that conversation pretty quick because not many people really want to crop share anymore, even on the tenant side. They just don't want to deal with that mess. So, Scott, I don't know if you have any opinion on that or get questions.
You get into the disaster payments, things like that. The intention of that is to replace a loss in the crop at the end of the day. So if you're cash renting, it isn't supposed to be an additional on top above your crop. It's supposed to be a replacement. So a cash rent should be a cash rent.
How about a written lease? How important is that?
Very. We encourage the written leases. We don't manage any farms without a written lease. It just spells things out. Chances are, you know your tenant. Owners know their tenant. It might be a family member, might be whoever, but sooner or later there's going to be a different component to that relationship where the farmer might retire, their kids might take over, the landowner might pass away or give the land to their kids. Whatever it is, the components of that relationship will change from the good old boy handshake method that was pretty valid 50 years ago to we should just define a few things so we don't end up spending a bunch of money in court. So that's...
How detailed do you need to be?
Very. No.
Okay.
That's 2 answers in a row. But I don't know, I think our standard lease is 9 or 10 pages long. And it talks about everything that could go on. Fencing, when the payments are due, access by the owner. I mean, it just goes into everything you can think of.
Oh, absolutely.
That
yeah.
just to have it in there, and it's not that you don't want to cause any kind of problem. It's just that it just needs it helps to have it spelled out. Just once you can have a good relationship with your farmer owner.
One of the biggest parts of that if you don't have a written lease and it's just verbal, years go by. Okay, maybe that relationship ends. Maybe the next generation wants to sell that. Well, when does that lease end? It's not spelled out. So, I think in the states around here, it's going to end on the anniversary date of when that lease was started. Well, who's going to remember that 20 years down the road? So, I deal with a fair amount, that we're going to sell that turns out they're verbal leases, and, the key is written notice. Well, I told them, they'll say. No, you send them a letter, because, there's a lot of things get misconstrued and whatnot, or maybe it's you'll get your grandpa said I'd have the first chance to buy that when it got sold. Well, I don't know, it's not on paper. So you run into a lot of those problems, especially as time passes.
Sure. Let's talk about some of the some of the stocks that you guys handle and stuff. Are you seeing Stock American Crystal shares? Where are we at with that? Have we seen any sell yet this fall?
I think there's some listed, and they're not selling. And I think this year more than ever, it's really going to be a wait and see game because, the B payment's going to be significantly lower this year for Crystal. I think, Mindac is private. They handle all their own trades. That's going to be much lower even than Crystal. But yeah, the economics there are changing. It's still probably going to be the go-to. I mean, beets have been the money crop for the Red River Valley for years. So that is really the wait and see game. They've been trading between 5 and 5,600, and I would expect they probably stay somewhere in that range. And then, the ethanol stocks, which is the other primary ones we handle, those have just kind of been steady, bounce around a little bit. They're not hot, they're not weak. They're just kind of, bumping along.
Sure. Kyle, you're an appraiser, so let's just talk about that just a bit. What factors do you consider doing a farmland appraisal?
Well, ultimately it comes down to other sale data. Sometimes you have more of it, sometimes you have less of it, but the key is knowing the area, knowing what's driving the market. Maybe it's not the things you would think it should be. In some areas, especially in the Red River Valley, more people are used to farming square pieces, and if it's severed, it's probably gonna get discounted. But if you're in areas where there's potholes or whatever, and you still have a railroad line coming through it, it's chopped up to begin with. So the railroad line, they're just used to it. So it's knowing those sorts of things. Maybe it's productivity ratings. Maybe the buyers or the influence really pay attention to them in this area. And I can think of investors as being the prime ones because they'll look at that and they don't know the other characteristics like drainage or whatever. And I've gone through periods of time, especially in the Red River Valley, where it's like, well, I know this piece over here is better than this piece, but they're both flat, they're both black, and that's what these buyers are paying attention to. So it's knowing all those factors and basically interpreting the market. We don't make the market. What our opinion isn't necessarily the right, isn't exactly what it is. It might not be what it is tomorrow, but all those are factors we try to analyze and interpret as best we can.
So if I have an appraisal done, how long can I use that? How long is it good for?
Well, technically 1 day, because it's as of that date. The market, things could change tomorrow. The example I always use for that is 2008, the fall of 2008, when Enron crashed, and then all of a sudden, that's the best example. That's a case where I would say we lost $500 an acre on land, like boom, like that. So whenever I do an appraisal, it's getting to be not many, but I did one last year where that effective date was right around 2008. Whereas normally, okay, I can use a sale from 2010, not then, because things did change. So the reality is usually things don't change that quickly. So it's good for a period of time as long as things are kind of bouncing around steady. But technically, yeah, 1 day.
Well, our presentation today has been called Farmland Update, Holding, Soft Landing, or Bubble Bursting. Let's talk each one of you. We'll put you on the spot. What do you think?
What
Well,
was the question again?
Well, our presentation is called Farmland Update.
Oh.
Are values holding? Are we seeing a soft landing or bubble bursting?
well, I think soft landing, because I think we're past this peak. Not to say that we can't see some sales activity that boom goes up again, but so the term that comes to mind to me is soft landing, because we're clearly not at the peak. So, but we haven't had any major adjustment like we did 10 years ago, where we maybe saw 10, 20, 30%. So soft landing for me.
I think in my area, I just think it's leveled out. I mean, it was going from, year over year, it was going up 25 or 30% over the last year. I mean, we would have owners or buyers that would want to sell a piece of land and they'd want an appraisal done. And by the time the appraisal was done and then they sold it, you never ran into an issue because the market was going up so fast. The appraisal, like Kyle said, if it's good for one day, 3 or 4 months from now, by the time you market it and sell the property, it was worth, every single one of them was worth more than the appraised value. So I think now we're in that, and I'm not trying to talk from an appraisal standpoint, but when the appraisal's done, that's gonna be the appraised value for a longer period of time, just because the market's not moving like it was then. And so we're not seeing land values typically go down unless it's a compromised piece of land. If there's a blemish on it, or if there's something wrong, basically something not the quality's not high quality. If it's high quality land, it's pretty much, it's not going up 20%, but it's not going down either. So,
Yeah. I would say, my thoughts are maybe a combination of Kyle and Darwin there a little bit, a little bit soft to holding steady. I would say I think for the most part we're pretty steady. What I'm really watching is, what's going to happen in our markets. We raise a lot of beans here in our region. A lot of our beans get shipped out to the Pacific Northwest. We're not shipping a lot of beans out there. If we go into 26 with the same conditions and the same thing happens in 26 in the fall, if we have 2 marketing cycles where we have just terrible demand for our product and we don't get some kind of a massive ad hoc payment, then my conversation could potentially be really different than it is as we sit here today. Right now, there's still excitement when land comes up for sale. There's still bids. I would say at best it's steady. It might be a little bit soft, yeah, but keep your eyes open for the next couple of years.
What are some factors that we should be watching here then going into the future, as far as to give us an indication what land values are going to do?
Well, we're going to start finding out. The sales season will start picking up a little more now, but yeah. I mean, I guess obviously if you see no sales, you're probably not going to see. That's yeah. I mean, that's what's going to tell the story.
crop prices and interest rates are always factors. If the interest rates go up and the crop prices go down, it's going to affect the sale of what people are willing to pay for farmland. So.
And then I would say if there's going to be a correction, we'll probably see a correction in land values before we see a correction in rents.
Okay. Rents lag behind.
Yes. Yep.
It's if you can't buy it, I mean, renting is a short term, and people will be more aggressive at that just to get their foot in the door to rent.
Yep.
Any final thoughts or final comments here?
I will say it's interesting times, and there's always one factor or another that's kind of leaves you guessing, or we'll see what happens, and this year's no different. So it's just a matter of what that factor is. So this year it's the land values and rents not really in sync with what the commodity prices and what's going on there. But what happens in the past doesn't guarantee what the future brings.
Yeah. As far as rents go, I think at least for this year, I think the market is staying pretty steady. I mean, everybody's used to crop prices fluctuating, and a lot of it's just going to be, are they going to come back? You know, this time next year, are the crop prices going to be the same as they are now, or are they going to have increased? Or are they going to have decreased? And that'll have a bearing on what happens, maybe not this fall, but next fall. And so if, you know, the market, you know, when we say it's what the market will bear, if a landowner wants more rent and the farmer wants less rent, the conversation is just simply, if you can't or don't want to pay it, we have to go find out if anybody else will, and if they will. And that tends to be the conversation that makes people go, okay, well, I get it, I want to keep it, and we'll see what next year brings. Is typically how we don't end up switching tenants usually, so.
You know, and my thought is, you know, farming and farmers, eternal optimists, so to speak. Land it's showing it's a good investment. I think it'll continue to be a good investment. I think we potentially could be in for a little bit of a bumpy ride. If we lose export demand, we can create demand internally, but it takes time. It takes time to build processing facilities, increase demand for E15, sustainable aviation fuels, things like that. We literally could consume all of our production here, but it's going to take a while to get to that stage. If we mess up and lose our markets around the globe, there's going to be a transition period that might be a little bumpy.
Sure. Very good. All right, great stuff for this afternoon. Let's give the gentleman from Farmers National Company a hand. Kyle Nelson, Darwin Thuy, Scott Hitter. Thank you much, guys.
Thank you, guys.
It's all about nutrient efficiency, right?
Exactly.
I've taught you all the things that you know.
Oh, yeah, here we go.
I'm Sherry Cook. I'm passionate about helping farmers with crop nutrition, and I'm here to help you with your operation.